New kitchen or new bathroom with a spa tub. Or maybe, dare I say it, an additional bedroom? Welcome to the Red Desk. This episode, we're choosing between a home equity loan and a cash-out refinance loan. Spoiler, it depends on the details. Since you're here, chances are you've heard that both of these loan types are good options for home improvements, paying off tuition, consolidating your debt, or anything else you need a lot of money to do. Plus, both give you all the money at once, are usually low interest, and use your home as collateral. And all that's true. But you don't want to borrow too much and add extra risk for no reason. Or else you'll end up like James, who read one book on mindfulness and just had to have a Zen garden. Except now, he's broke, and no number of koi fish can make that better. Don't be like James. Let's figure out which loan type works for you. A home equity loan is also called a second mortgage because, well, that's kind of what it is. You'll still have a regular mortgage payment and payments on your home equity loan. Rates go up and down depending on the market, but home equity loan rates are usually higher than conventional mortgage rates because that second mortgage takes second place if you fall on hard times. Lenders know you'll put your money toward a primary mortgage first. In other words, it's riskier for lenders, and they pass that risk on to you by charging you more in interest. Most banks let you borrow up to 90% of the equity in your home. So if your house is worth $400,000, then you take 90% of that number and subtract what's left on your mortgage. If we stay with that example, 90% of $400K is $360K. And if you owe $200K on your mortgage, you should qualify for around $160K. Home equity loans make the most sense if interest rates are higher now than when you bought your house, interest rates on home equity loans are lower than current mortgage rates, you need cash as soon as possible, you have good credit. Let's look at an example. Let's say Sarah and Barry are locked in a 30-year fixed-rate mortgage at 4.25%, but current rates are 6.25%. They have a credit score of 720, but don't have a lot of savings and need cash ASAP to prop up their family business. They would be perfect candidates for a home equity loan. Doesn't sound like you? Maybe cash-out refinancing makes more sense. Cash-out refinancing is similar to getting a home equity loan, except you pay off your existing mortgage and get a new, bigger one that includes the extra cash you want to borrow. In other words, you borrow more than your mortgage has left and pocket the difference. Interest rates are usually lower on these than home equity loans because they have debt priority, meaning they get paid first if something goes sideways. Cash-out refinancing makes the most sense when current interest rates are lower than what you have, you like having a single payment, your home is worth more now, your credit score is average or above. This is Andres. Andres bought a house at 6.75%. It was a higher rate than he would have liked, but it was still the right time to buy for him. Flash forward a few years later, and he and his wife have 2 kids, about to have a third. The thing is, they don't really have room for a third child in their current home, but they have a perfect location next to the grandparents. They started thinking and realized knocking down the back wall and building an add-on is the perfect solution. But they think it would cost around $75,000, money they don't have. But interest rates have conveniently dropped to 5%, and their home has gone up in value by $50K. Andres and his wife would be a textbook cash-out refinance case, since they would get the cash they need and drop the rate on their existing mortgage. Success! The real lesson is to do the math. Even if you see yourself in one of those scenarios, it pays to run the numbers on both. Treat this whole thing like shopping for a car. Get quotes for each loan type from 2 to 3 different lenders. Run the rough numbers and see what will cost you more and balance that against your timing and needs. Ready to start researching? Figure out if a cash-out refinance or a home equity loan is right for you with Rocket Mortgage. And until next time, Red Desk out. Thanks for checking us out today. If you'd like to see more videos just like this, guess what? Click right here and don't forget, like and subscribe. We'll see you next time.